Hello and welcome back to Robinhood Stock Market Watch List. My name is Carlos, one of the admins of our Facebook group, and today is February 6th. It is Sunday. We are having our live meeting, so that way we can talk about some of the activity that took place on Friday right before close, as well as kind of go over some of the advanced basics and kind of looking ahead this week on economic reports, news, as well as financial earning releases. So there's definitely a lot to go over. So, but first things first, let's go over some what I call the advanced basics. Today, let's go over investor and trader rules and some of the differences between an amateur trader and a professional trader, because it's always good to know kind of the differences between what's right and wrong. And as a new trader, you're not sure exactly what that is unless you're actually explained. And so let's go over the rules first. So I'm going to pull up a list of rules here that we'll use as an example. Now these rules are a list of example rules for day trading. And so there's different types of traders and investors. You have your long-term, you have your short-term investor, and then you got your swing traders and day traders. And so, but they all have something in common, and they all have rules that they must always follow by. They must be strict. You must never break them, because if you do, catastrophic things can happen. And so that's why every investor and trader must have some kind of rules in place that they must never break. So the first rule, and these are just a small bit of basically kind of your top 10 rules, but you can easily come up with 20 different rules. And so, but these are the majority. And so rule number one, always trade with some kind of limitation on volume, and meaning like average volume. So if you're looking at a stock may have maybe an average volume of 150,000, just hardly anything. And so versus a stock that may have 20 million in volume. Now, volume is today's the current trading days buying and selling activity. Now, it could be mostly selling activity, it could be mostly buying activity, and so but always have some kind of limitation on volume, even if it's at least 1 million daily average. As well as options. If you're in options, same rule, always have some kind of limitation on some kind of volume, because volume is activity, and so that's something that we need to trade off of. As well as price, have some kind of limitation on price. Now my preference would probably be preferably $5 or more. And this example says 30 cents or more. I definitely don't recommend anything under $1, because if a stock is under $1, it's really in violation of the stock market rules, because they're supposed to keep their stock value of at least $1 or more. If they're under $1, they're at jeopardy of either getting delisted, penalized. They could file for a reverse split or a time extension. They're so limited on what they can do until all of their options are ran out, and then they have no choice but to get delisted. So under $1, very risky, but for day trading, you're in and out. You're never really holding overnight. So but most people don't do that. So try to have some kind of price limit on your stocks as well as stock options. Same thing with percentage change, which kind of leads into activity. Maybe the stock is up 10% or more during pre-market or something. It could easily keep going up, especially after the stock market opens. So always kind of look at kind of a trending direction. So if a stock has been trending up for quite a while, it could be within the last week, maybe the last month. So there's just a lot of things to kind of look for that, but making sure that it's definitely going that direction that you need it to. Now, rule number 2 says day trade only, no swing trading. Now, the reason why it's a rule for day trading, obviously, is because day traders don't always know exactly what the next day is going to be like, so they just trade on however the day is going to be like, whether it's very bearish or very bullish. They can kind of watch and see especially after opening, they can kind of see, the volatility, whether, things are going up or down, and then they can kind of wait and see and time things perfectly. That way they can get in, get out, and they can do that every day. And without really holding anything and jeopardizing in case the stock market plunged the next trading day or something. So that's why it's a really important rule for day traders, is to just day trade only, not to hold anything, especially throughout the weekend. Rule number 3 says trade stocks with news, press release, etc. Anything that's creating a lot of volatility. Or if you know that there will be news, then there's the old saying, buy on rumor, sell on news. And so the idea is to try to get in the stock right before it hits the news. That way, you can take advantage of the situation and not be the other way around, where you have the news and then you're buying into it, and then all of a sudden the stock goes down. Then you're like, how come the stock's going down? It had good news. And so we just always got to be, ahead of the curve. And so rule number 4, volume of the day, or even high market cap stocks and companies. And that could be things like Apple, Boeing, Facebook, all kinds, those kind of things, because they have a really smooth algorithm. They're not like a penny stock that can surge straight up and then plunge straight down. These typically will move 1, 2, 3%, and so by day trading those, you can kind of do that a few times a day or a few times a week, and consistently gain quite a bit. So, and that's all what it's about, is consistently gaining on a daily basis, no matter what. So rule number 5, enter at midpoint of support and resistance. Now, our last meeting, we went over moving averages and patterns. And so support and resistance really play into those. And so it's just really important that you are aware, so that way you're not really buying when the price is at the resistance. You need to buy more when it's lower when it's at the support level. And so, or if you're into stock options, you can reverse the strategy. You can buy puts when it's near the resistance, and when it gets to support, then that's when you can sell. So options really kind of enables a lot more opportunities. So rule number 6, always use a limit buy and a limit sell. Now, when you're trading shares in stocks, your application will usually default to a market buy and a market sell. Now, the advantage to a market buy and a market sell is that when you place the order, it'll execute immediately. But when you do a market buy, you're telling the system to buy at any price, even if it's at a higher price than you anticipated. Or if you do a market sell, you're telling the system to sell at any price, but instantly, even if it's at a lower price than you anticipated. So that's not really so much in your favor. But if you do a limit buy, you're telling the system, buy at my particular price or lower, whichever is in my favor. Or if you're doing a limit sell, you're telling the system to sell at that particular price or higher, whichever is in your favor. Now, if you send the order out using your limit buy and a limit sell, it may or may not execute, because it depends on how long it took you to place those settings and to send the order out. The price may have already passed that, and so that's when your order may or may not execute, because now the price is beyond that. So and so the best way to try to avoid that is to, when you do a limit buy, set your price in there, but then minus a couple pennies. Or if you're doing a limit sell, if you're doing a limit buy, set your price a little higher by a couple pennies. If you're doing a limit sell, put it down a couple pennies. Just that way you're making up for the difference for the time, in case if the price did kind of pass what you would have normally put your price at least there's a couple pennies below that. That way it's more likely to execute, rather than just sitting there waiting, and then you may have to go in there and cancel it or modify it or replace it. So when you send the order out, you definitely want to try to get it to execute the first time. Otherwise, you may have to go in there and then the price is even lower or higher than what you originally, and then you're just chasing it. So you want to avoid chasing the price. So rule number 7, it says ABCD pattern, enter at the C point. Now I'm going to pull up another image explaining more about what that is, because that can be very very confusing. So let me pull up another image here that'll explain the ABCD pattern here. Let's see. So this is the ABCD pattern. So, and it's very common early in the morning after the stock market opens. When the stock market opens, and then all this, whether the stock is down or the stock is up, the stock market opens, the stock price will usually come up for the first 15 minutes. I don't know if you guys noticed that yet or not, but it comes up, and usually it may form a little pattern, but this is just kind of a, quick, this could be like a, 15 minute chart or whatever. But so usually within the first 15 minutes, the stock comes up, and that's where the stock breaks out and sets an intraday high point. That's the A point. And then the next 15 minutes, the stock pulls back and sets an intraday low point, and that's right here. So that's 30 minutes after the stock market opens. And so it's already kind of starting to form a little bit of a pattern. I'd say kind of the bullish pennant pattern, but which these were patterns we were talking about last meeting. But then another 30 minutes between B and C. This is usually about 1 hour. It could be 45 minutes. Sometimes it could be an hour and 15 minutes, but normally it's around 1 hour where the stock price sets a higher low and begins to turn. And so, so that first hour is basically all the volatility, all the, and so that way the day trader can now watch and observe, and now we can kind of see, the moving average lines that are normally on our charts and our graphs, and then it'll provide the buying signal. We have our pattern placed, that knowing whether the stock's going to go up or if it's going to go down. Now, if we're into stock options, if we know it's going to go down, now we can bet against it. We can buy puts and ride that thing all the way down and have our account go up. And so it's just really important to kind of watch and wait for at least, now you can still trade within that 1 hour, but it usually takes a little bit more experience and a little bit more confidence. And so that way you can kind of get in and get out, and or do what you need to do safely and securely. But for the most part, usually for the safest strategy, wait after 1 hour if you're new, and then kind of wait to see what happened. And typically, and we'll go over economic reports here really soon, but a lot of times there's economic reports that are scheduled to come out after the 1 hour after the stock market comes out. So it's like the government politicians really have they place these schedules perfectly to really help manipulate the stock market, whether they want to try to create some bullish characteristics or bearish characteristics. And so so this is basically your ABCD pattern. And so let's switch back over to the rules here. And so again, that was rule number 7, ABCD pattern, enter at the C point. Now, rule number 8 says sell 50% of your position at a target goal. That's not really a day trading rule, because day traders get in and then they get all the way out, and then they just repeat the process. However, this is usually a rule for long-term investors or short-term investors, where they will buy a certain point, and they will sell once it gets to a certain high point, and then they'll leave usually whatever that they originally dollar amount that they put in. So that way they feel whatever's left in there is basically free money. And so rule number 9 is beware of the false breakout, sell right below the support level. And so and typically that can be caused by maybe you didn't have your moving averages settings set right, or maybe you thought it was a different pattern, and it could have been maybe something else. Maybe you were trying to identify it a little prematurely. And so and it's just really important to kind of be patient and wait for a final confirmation of what the price is going to do. And so and we'll talk more about those later throughout our other meetings and stuff. And then rule number 10 says cut losses. Always have a stop loss. No matter what it is, just don't be one of those those members online that are like, I'm down 40 or 50, 60%. What should I do? Should I buy more? Should I sell? Always have something, whether you're, down, 5%, or 10% if it's regular shares, but if it's, stock options, maybe down 10% or down 20%. But ride winners at least, 10% or more, or 20% or more, and sell when you are given a clear sign and a signal to sell. And so there's many different rules, and this is just kind of the tip of the iceberg of rules. And so it's just really important to implement a variety of different rules. That way you can set up some consistency. And so that's kind of what our education is for this morning, and then we'll kind of lead into what's scheduled to happen for this week. So let's get into our web browser here really quick. Did anybody have any questions regarding the rules or anything? Oh, and then the other thing we were going to go over was the differences between an amateur trader and a professional trader. But yeah, if you guys have any questions regarding the rules, you can feel free to chat, or you can voice talk. You may have to unmute your mic, but I'm going to pull up the differences here. Give me one moment. All right, okay, so here is the differences between an amateur trader and a professional trader. Because again, it is really highly critical that you know the difference between right and wrong when it comes to trading. So an amateur trader will often let losers run and hope that they turn around. And there's that word hope that I do not like, because you do not want hope when it comes to trading. You don't want to just throw money at something and hope that it sticks. You got to have a plan. You got to know, you got to be certain, because uncertainty is our enemy. Professional traders will cut losers when a stop is reached and a trade idea is invalid, which is something that we've talked about as well as in the past when it comes to like moving averages and signals, patterns. There is a system that we developed that provides this information, so that way we know when to get in and when to get out. Amateur traders will close their winners too early because of fear of giving back profits. And again, that's where they don't have a system. They're just throwing money at something, left and right, and hoping that it sticks. And maybe it was just really bearish, the last, several weeks, and they finally got something, or they make a little bit of profit, and they quickly sell because they got scared. And that's all part of your emotions. We got to keep the emotions out because it will affect our buying and selling decisions. Professional traders will let winners run until a profit order or when a clear signs are given to exit. Trust their system, and the system is our moving averages, our rules, and everything else that we talk about. So amateur traders will change their trading system after a few losing trades. Now, the year basically, the stock market has a yearly algorithm, and it's got a 10-year algorithm. Now, the yearly algorithm basically is part of the seasons, like our winter season that we're in right now, which is the bearish season of the year. And it usually goes on until about around mid-March, and then we start, getting more of the spring characteristics or the bullish characteristics. It's that season where we see that transition of bearish to bullish, and then during the summer season, that's where it's just full-on bull mode. Where almost every day, the stock market's over green. The day usually closes in the green. Very rare does it close in the red. And so it's just, there's a lot of different characteristics throughout the year. It's just really good to know. But by having a trading system, we can adapt to every single situation, no matter what the stock market throws at us, whether it's bullish or bearish. Bring it on. Professional traders will stick to their rules religiously and think process oriented. That's where we keep the emotions out. Think to the process like you're a robot. You know, you're like some stock market ninja. And so just don't break the rules, just know the process, and you'll be just fine. Amateur traders will close their trades, never look at them, and avoid a learning effect. You know, you always got to learn, because the more you learn, the more you're going to earn. Professional traders will analyze their past performance, keep a trading journal, and learn from their past behaviors, as well as learning from other people's mistakes. That way they don't make the same mistakes. Amateur traders sometimes will overtrade, revenge trade, and hope to make a lot of money fast. Now, there's nothing wrong with making a lot of money fast as long as we do it the right way. Now, the revenge trade is part of your emotions. Your emotions are messing with you because maybe something didn't go right and now you're upset, and you're just trying to do something that you shouldn't be doing because now you're maybe violating your rules or the process. And so and that's where, you know, that's where you're getting those amateur characteristics, and you want to stay focused and lean more towards the professional characteristics, where the professional traders are aware of their emotional impacts and know how to identify and manage their impulsive buying and selling decisions. Where an amateur trader will open their trading platform and then desperately try to find random trade entries. And then again, sometimes you see those online. They're saying, "Hey, I got $3,000. What should I put it on?" You know, and they'll have all kinds of responses from people. And typically, you'll get responses from people that are already holding. The price is already down. They're at a loss, so they're just trying to inspire people to buy more, hoping that the price would go up from it. And that's completely wrong. Professional traders will keep a trading plan and plan their trading day ahead, follow a structured approach, and that's what leads us into the next thing. Is in case, especially if you don't know how to plan ahead or plan a trading structure, you're going to learn right now. And because that is extremely important, because we do not want to go into this week not knowing what's going to happen and what to do. We need a plan. And so this is going to be a phenomenal week. Each one of you guys should make at least 100% gains this week. There's no reason why, because there's so many great opportunities that are going to happen this week. So that's your guys' goal this week is to make 100%, if not more. I want to see 200. I want to see even more than that from you guys, but at least 100%. Okay. So let's go into the trading plan. Let's go over to our Facebook group. But before we dive into that, anybody have any questions regarding the rules or the differences between an amateur trader or professional trader? All right. All right, no questions. To me, that makes it seem like you guys, everything makes sense. That's perfect. That's good. You guys are very smart. Let's move on. So the first thing that we need to always look at when trying to plan ahead is the economic reports, because one of the main things that affects the entire stock market system is economic reports. And so if that's the case, it only makes sense to really dive into that and to really and to own it, know everything about economic reports. And I've been to many different websites and places to try to figure it out. And the best place that I've ever found is an app that you can download in your app store, as well as a website called investing.com. Now on the website, we'll go to the economic calendar, but if you're on the mobile app, it is a little funnel icon on the top right of the screen. Now we'll click on economic report on the website. Once you get to that part, we need to filter everything. So there's a little filter thing here. Once you're on the calendar of the app, you just change whatever the calendar part of it says on the top to economic reports, in case if it says earnings or whatever. there's a little filter or a little funnel icon on the top right of the mobile application you want to click on. But once you get in the filter area, we need to clear everything, clear it all, because there's only two things we need to see, and that's put a check mark under the United States. And then down below under importance, we have a 1 star, 2 stars, and 3 stars. We need to put a check mark under 3 stars because we're wanting to see everything that'll have the biggest impact on the United States stock market. So then click apply. That way it'll filter that out. And then we want to click on this week. That way we can see everything that's going to take place this week. Now, this week looks very, very light. Normally there's a lot of stuff, a lot of economic reports that's scheduled to happen this week, but that is definitely not the case this coming week. So there's nothing on Monday, nothing on Tuesday. So that stuff is basically left for investors and Wall Street to kind of, basically try to pump the market up. And so we'll have to, those days we'll have to also look at the White House and Joe Biden's schedule, because a lot of times those press conferences can also manipulate the stock market. But those schedules can change, and they're not really developed or released until that particular day. So every morning, we go over the White House schedules early in the morning before the stock market opens. But for now, at least we can see ahead of time for the week of what economic reports that are scheduled to be released. Now, the earnings reports are really going to have a big, I think, play this week for a lot of the volatility of the stock market. But for the most part, it looks like Wednesday is going to be the first major economic report that will be scheduled to be released this week. And so knowing the times are really important. Knowing what time your stock market opens in your time zone, as well as when it closes. Now, when you see this information on the website, it's going to be based on Eastern time. But if you're looking at on the app, it's going to show the time based on your time zone. So again, it's just really important to know, like for example, Eastern time, the stock market opens at 9:30 in the morning. So this basically means that this economic report is going to be released 1 hour after the stock market opens. So this is going to create more volatility with the stock market on Wednesday, 1 hour after stock market, which is normally the point where we start to lose the volatility. As we were talking about the ABCD pattern, now all of a sudden, as I had mentioned before, sometimes the economic reports are scheduled precisely at the times that they need to provide, more volatility with the stock market. So the whole thing is it's all kind of not like rigged or anything, but everything kind of helps, each other. And so it's just wise to know that, as well as the previous report. So this is basically a weekly report, because it's really important that you look at this stuff every week, every day, and because the more you look at it, the more you'll know what this stuff is and how it plays a role, and you'll kind of remember what some of the other previous reports were, because you've been looking, and I've been looking at this stuff for years, and so it just it's really extremely helpful. And but yeah, so last week the oil inventories were down, and this is a number so this is one of those economic reports that we need down. The lower the number, even if it's in the negative, the better. If the lower, the more bullish, the more positive it is for the stock market or our economy. If the numbers are higher, that's bearish, that's bad, that's a negative. And so and then lately the amount of inventory levels have been kind of high. They've been kind of in the positive. So last week it was it's been a while since we were in the negative. So that did provide a lot of good bullish characteristics. But now they're saying that the inventory levels should bounce back up, which should provide bearish characteristics. But it looks like that they have the number high anyway, so I'm hoping that maybe the inventory levels will definitely be much lower than that. So as long as the oil inventories come back lower than this, that will provide bullish characteristics. But if it's higher than this, that'll provide bearish characteristics, meaning where if it's higher than this, then the stock market's going to go down. If it's lower than this, the stock market's going to go up. If it's lower than the previous report, then the stock market will go up even more. And so we have to be able to know, these types of characteristics as well as the time. Now, when this information is released, it is released almost precisely at this time, at the same time these news companies and Wall Street and everybody else is getting it. Now, it takes time for these news companies to receive that, to process it, create an article, blast it out. It could normally take 15 minutes, 30 minutes, or an hour for the news companies to let the public know about this report. And so why wait that amount of time? Time is money. Time is of the essence. We should not wait. We need to know what's happening when it happens. And so that is why it's imperative to know this stuff as soon as it happens, as well as the forecast, because in case if something happens, then to abort, it's invalid, the strategy is invalid, and to re-evaluate the situation and to re-strategize. So that way you can use that as an opportunity to profit from it, because bad news can be good news. It just all depends on how you take it and how you apply your strategies to it, because there's a strategy for every situation. So if you're not sure exactly what this type of reports are, like on Thursday at 8:30 in the morning, this is basically these two 8:30 economic reports are basically scheduled to be released 1 hour before the stock market opens. So this is going to influence the, it's going to have an effect on the stock market during pre-market, right before the stock market opens. So this could really make the stock market surge or maybe even plunge right when it opens. And so, but if you're not sure exactly what some of these are, like the core CPI and this is month over month. So basically this is a monthly economic report. Now, if we see a yearly economic report, that'll have the biggest impact on the stock market versus a weekly economic report, because the weeklies, it's recurring, it does have a major impact, but not as much as if it was a monthly economic report, a quarterly, and especially a yearly economic report. And the yearly economic reports we'll usually see here pretty soon, but usually we'll see those during the first quarter. And that's what can cause a lot of bearish characteristics. So we got to watch out for those yearly economic reports once we get to those. But again, if you're not sure what a core CPI is, feel free to click on it. Even if it's on your application, it will provide you a very small paragraph letting you know what it is and how it will have an impact on the stock market. So for example, the core consumer price index, or the CPI, measures the changes in the price of the goods and services, but excluding food and energy. The CPI measures price change and perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation, where a higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. And so usually there's only two economic reports that need to be low, and that would be your oil inventory levels and unemployment reports, which is our initial jobless claims. That's our unemployment report. And again, that one is going to be our weekly economic report. And so for last week, it was up. I mean, unemployment's going up, which is to be expected right after the holidays. And so last week was reported up 238,000, but it's forecast to be about 228,000. And so typically, as we look at this stuff regularly, this is up high, and normally when we get a kind of a little bit of a surge in unemployment, we see it come down, we bounce down. And so I would definitely anticipate that it should meet this or beat it. So again, we need this number to be down. So as long as if it's lower than the previous, we're good. If it can meet or beat the forecast, we're even better. So that's basically our goal. But if it's higher than the previous, expect bearish characteristics for sure, especially after opening. Now, sometimes we may see a positive report and a negative report. In that case, expect mixed signals. we could see stocks just kind of, going all over the place. We may see a lot of stocks, maybe go up. We may see stocks go down, or maybe it'll just range and it'll just be flat for the day. But if both of them are negatives, definitely expect bearish characteristics for a majority of the stock market. But if both of them have met their forecasts and they're all good and they're all positive, then expect bullish characteristics for the majority of the stock market for that day. And so, but just by looking at these, I would say that that Wednesday, I would say Wednesday should be pretty good because I think we should reach somewhere maybe in between, if not even better. Even though, gas prices are slowly starting to kind of come up due to the cost of oil. And so, but that could create people not driving as much or even flying. And so it is possible that we could see oil inventory levels continue to accumulate. So that is not good. So we really have to wait and see what this report is going to look like. That way we can determine what the rest of Wednesday is going to look like. So, yeah, definitely Wednesday, proceed with caution on that one. But yeah, Thursday, with the CPI report, this number may be a little low. I think we could easily hit back at the previous report, maybe a little bit higher. The jobless claims, again, it was pretty high last time. It should definitely be lower this time. And so I think Thursday looks pretty good for the most part. Again, Wednesday looks kind of questionable, but Thursday looks looks pretty bullish to me with these two economic reports. Should be pretty good. And then Friday we have the looks like the government has some kind of policy report that's scheduled to be released at 10 o'clock. So that's 30 minutes after the stock market opens. So that is definitely going to provide, and this is a very rare report. This is not a report that is normally that they do. So this is definitely something that's going to provide a lot of volatility on Friday after the stock market opens. So the Federal Reserve Act requires the Federal Reserve Board to submit written reports to Congress containing discussions of the conduct of monetary policy and economic developments prospects for the future. This report, called the Monetary Policy Report, is submitted semi-annually to the Senate Committee on Banking, Housing, and Urban Affairs, and to the Housing Committee on Financial Services, along with testimony from the Federal Reserve Board chair. And so you can see semi-annually. So this report only happens twice a year, every 6 months. So again, as I had mentioned, that the further out these reports usually are, the more volatility that it's going to create. So this is a big one. This is the biggest economic report that'll have the biggest impact this week, and that's Friday, 30 minutes after the stock market opens. So whether that's going to provide bearish characteristics or bullish characteristics, I would say it's going to provide probably bearish characteristics. But we'll have to see, because the pre-market, as well as maybe even after hours on Thursday, will provide signals of what the majority of Friday is going to be, especially during pre-market, because investors, especially at Wall Street, they're either going to buy a lot or they're going to sell a lot, and we're going to see that reflect the pre-market on Friday morning. So it looks very, very weird. This is not a really a common schedule for these kind of economic reports, but like I said, it's really, really good to be aware of what's going to happen there. And that leads us to the earnings report. That's where we're going to see a lot of our gains are going to come from. So let's go to our website. So, and if you don't utilize our featured area of our stock market group on Facebook, it used to be called the announcements. Now, when I created this group, 4 years ago, I kind of use this as my bookmarks. Anything that I felt like I needed to save for my reference as well as my members' reference, I would just save it in the announcement area, which is now considered the featured area. And so I would save, all kinds of stuff. And so, but it immediately it became very popular for the group because now other people were able to utilize the same information that I was saving for myself. And so now other people can use it, and now we can talk about it. So every Saturday I will post this scheduled week's most anticipated earning releases, followed by the top 10. So the top 10 is basically right here. We have Pfizer, we have ON Semiconductor, we have Tyson Foods, Cleveland Cliffs, Disney, Peloton, Hasbro, CVS Health, Uber, and Affirm. Now you can click on the image to pull up, the schedule, and you'll see a lot more economic, or not economic reports, but earning releases that'll be released before the stock market opens as well as after the stock market closes. Now there's some really big ones here that we're going to really analyze, and so usually either Sunday or Saturday evening or Sunday morning, I will post the top 10s analysis. That way we can try to analyze it again to plan ahead. And so we'll start from the bottom and we'll work our way up. So the first one is Affirm. And so I'll usually, because sometimes we don't always know what these type of companies are unless maybe we look at the image, because an image can say 1,000 words. And so you can see with Affirm being an app, can be downloaded on your app. So it says shop and pay over time, blah, blah. So it's a shopping app, or easy payment, blah, blah, blah. And maybe you can create your own store there, whatever. So it's just one of those type of retail type, stores. And so with Affirm, is confirmed to release their earnings on Thursday after the stock market closes. And I'll always post or put little emojis kind of highlighting certain important areas, and you can read the whole thing. And these are just, the numbers don't lie. And so this is fully, analyzed, but the most important parts are basically pointed out right here for you, making it as easy as possible. So the company's earning release basically has a 68% expecting an earnings beat. Now, when you look at this stuff regularly, around 65% is average. So 68% is just slightly above average. However, the option traders are pricing in around a 22% movement in either direction, whether it goes up or down. And so, but if you're, if you want, 68% is not bad. You can buy shares and hold and see if it does, go up, around 20% more or less. Or if you're an option trader, you can maybe buy calls, but again, 68% can still be very risky if you're planning on buying calls. So, definitely proceed with caution. But if you're an option trader, you can do what's called straddling. Straddling is when you can bet both the call goes up and the call goes, or the stock goes up and the stock goes down. With a 22% movement, that is what we're looking for straddling. And because if a 22% movement, whether the stock goes up or down, that you're going to lose 100% on one side, but your gains are going to be like 300% or 400% on the other side. That's going to wash out your losses on the one side, and it puts you ahead. So you can't lose with this type of strategy with something like this. So Affirm is definitely going on our watch list. Next one up is Uber. Uber is scheduled to release their earnings report on Wednesday after the stock market closes. This company's earnings release has a 63% expecting an earnings beat, just slightly below average. However, option traders are also saying that they expect a lot of volatility from this one, and that it should move around 13 to 14% in either direction, which is another great one for straddling. It might not be that volatile, but even at that, if we're straddling, with calls and puts, we're gonna lose 100% on one of them, but our gains will probably be like 200%. It's not gonna be probably as much as the Affirm will be, but it'll still be a great gainer. So straddling with these two are going to be a very safe strategy, and you're going to double your investment And so definitely keep those on your watch list. So then we got CVS is scheduled to release their earnings report on Wednesday morning before the stock market opens. The company's earning release has a 73% expecting an earnings beat, which is slightly above average. That's good. And option traders are pricing in around a 4.5% movement. And so not so good for straddling because it's not a big mover. And so, but it is anticipated that they have a good odds that they'll beat their earnings. I would say, 3 out of 4 chances or 3 out of 4 odds that they're going to beat their earnings, and they'll go up, around 4% ish. And so the next one is going to be Hasbro. Hasbro is scheduled to release their earnings report on Monday morning before the stock market opens. The company's earning release has a 40% expecting an earnings beat, which is way below average. That is not good for Hasbro, unfortunately. It really sucks because there's no Toys R Us, and Toys R Us was one of the great companies that sold a lot of Hasbro products. And so, when one falls, we may see, another company fall. And so, very unfortunate. And so, it's not looking good for Hasbro. But option traders are pricing in around a 5.5% movement in either direction. Just depends on what happens. But most likely, they're not going to do very well. And again, these reports are for the fourth quarter. And so we got to remember, this is for October, November, and December. And so if you were looking at the economic reports, for the last several months, you would remember that the retail sales for December were down. It was very surprising because normally retail sales are up because it's a holiday week, or not a holiday week, a holiday month, a holiday season, because the shopping and stuff. Well, due to a shortage in everything, with materials and stuff to manufacture things, they just weren't able to manufacture enough products to really, to really beat sales and whatnot. So it doesn't look good for Hasbro. Going up, Peloton. This is look at this, you guys. Peloton is scheduled to release their earnings Tuesday after the stock market closes. The company's earning release has a 2% expecting an earnings beat. I've never seen it that low before in my entire life. And so what's the opposite of 2%? 98% chance this thing's going down. That's like a guarantee. And so Peloton has had a lot of issues, especially legal issues, marketing issues last quarter. Obviously the picture explains what this product is, and so I'm not going to go into a whole lot of detail about Peloton and some of those issues, but it is not good. And so, but basically this is a gift from the stock market gods. They're basically saying the stock is almost guaranteed it's going to go down, and option traders are they're basically pricing in around a 22.5% movement. And so this is like, we could buy puts on this thing. It's almost guaranteed that it's going to go down. It's going to be very, very profitable. And if it goes down 20%, you're going to gain like 300, 400, 500% from this thing. This is a huge money maker. What a great opportunity. Like, again, this is a gift from the stock market gods. Thank you so much for this. This is planning our trade. This is how we do it. And so I'm really pumped, as you can see, very excited, because there's just a lot of great opportunities this week. And so we got Peloton, we have Uber, and Affirm so far are on our top of our watch list this week. So next one, other than Peloton, we have Disney. Disney is scheduled to release their earnings on Wednesday after the stock market closes. The company has a 46% expecting an earnings beat. That's terrible. I think that's probably the lowest I've ever seen percentage-wise for Disney. However, option traders are pricing in around a 6.5% movement, where normally it's around 3%. So this is, like I said, this week is going to create a lot of volatility. And as we've seen in the past a couple weeks, with these huge big movements, when a stock is surging 20% or 20% or even 50%, it takes a few other stocks along with it, and so it can create a lot of volatility in these particular segments of the stock market, where economic reports can have a big impact on the entire segment of the stock market. So the next one is Cleveland-Cliffs. Obviously, you can see they're kind of more of a mining, earth moving type of company, and so Cleveland-Cliffs are scheduled to release their earnings reports on Friday morning before the stock market opens. The company's earning release has a 82% expecting an earnings beat, which is going to be the highest percentage this week. And again, 65% is normally what average is, so this is way beyond above average. So that is really good for Cleveland-Cliffs. Again, we need miners and earth movers, because that's what we have a shortage on, rare earth materials and stuff. So these guys are, very, very productive, and option traders are pricing in up to almost a 10% price movement, which is still even good for a straddling. But why do that when you know for sure that 82% this thing's going to go up? But converting that into odds, that's still 4 out of 5 odds or chances that it will beat its earnings, and it could go up around up to 9-10%. So those are still great odds versus some of the other ones that we've seen. And then the next one is going to be Tyson. Tyson Foods owns a lot of brands, so bam, put it right there for you. That way you can see that Tyson's just not Tyson. I mean, they own Jimmy Dean. I mean, they own all kinds of stuff. And so Tyson is scheduled to release their earnings Monday morning before the stock market opens. The company's earnings release has a 54% expecting an earnings beat, which is terrible for this company. Option traders are pricing in around a 4% movement, which is not very volatile, and it's probably a pretty low stock anyways. This is usually a stock usually long-term investors buy and they hold and whatnot, because they're a big company. Now, next one is the ON Semiconductor Corporation. They are confirmed to release their earnings report Monday morning before the stock market opens, and the company's release has a 61% expecting an earnings beat. Now, even though we have a shortage in semiconductors, it doesn't mean that they're always going to beat their earnings, because there is still ultimately a shortage in rare earth materials. It takes a lot of these weird, earth materials to create a microchip. Different materials, even processors require gold. There is gold in your computer processors. And so if they can't get enough different rare earth materials, they can't manufacture these. So just know that, and that option traders are expecting around a 15% price movement in either direction, whether it's up or down, which is perfect. It is a great ingredient that we need for straddling. So let's put this one on our watch list as well as the other three. Next, last but not least, is Pfizer. Now, all these top 10 are going to be on the news. Again, what do the pros say? Buy on rumor, sell on news. So the idea is when it hits the news, the stock is already up or really down, whatever, just depends on the news. And that's the opportunity that we need to sell, because that will provide the highest profitable point at that time. And then so that's why we need to be aware of what the news is going to be like before it happens. And so Pfizer is confirmed to release their earnings Tuesday morning before the stock market opens. The company earnings release has a 76% expecting an earnings beat, which is definitely a little bit above average. So you basically have a 3 out of 4 odds that this is going to beat their earnings. But option traders are pricing in around a 6.5% price movement. So not as volatile as some of the other ones. So let's definitely keep the volatile ones on our watch list. Now, when we really do our due diligence on the economic reports and earnings and stuff, we always want to check with the top 5 things to watch in the markets. And I always post this as well in our group, because it is also very, very critical as we plan ahead for our trading week. And so this is a notification that you can also get if you download the investing.com app. It will alert you this top 5 things every Sunday morning. So I post that in our group. That way we can always talk about it during our meetings. So, but you can also go to the investing.com website. It's usually there in the front page. But basically what we need to get out of this is we need to see if there's anything we may have missed. Because it will talk a lot about everything that we just went over, like the earnings and whatnot. So February started with a tug of war in the markets, blah blah blah. Or with a game of following the leader crossed with musical chairs. Let me see, blah blah blah. Let's go to number one here. So number one, U.S. CPI report. So we already talked about that. January saw the United States added about 467,000 jobs, surprising the economists and analysts who expected that the Omicron variant disrupted might have a deeper impact. It's a reminder of how much the United States has decided that the COVID-19 is not a cause of huge concern, and also that the United States economy is fairly hot, thus inflation. The CPI and the core CPI report come out on Thursday during the pre-market. Again, that's what we talked about, where economists expected the CPI to come in at around 5.5% or a 0.5% increase month over month and a 7.3% year over year. With the core CPI, excluding the food and energy prices, also expect at a 0.5 or 0.5% month over month and a 5.9% year over year, with rumblings that the Fed might not only hike 4 times this year, but also jump straight to a 50 basis point hike in March. This report will have real weight. Okay, so basically, so what I'm getting out of this, as an experienced, and successful investor and trader, and looking at all this stuff, on a regular basis, basically, what I got out of this paragraph here is that originally the government wanted to increase interest rates twice a year for the next 2 years. So they compromised. Well, you had a lot of politicians saying, no, it's got to be more. If we're going to try to make save the economy or whatever. And so a lot of them were like 2, some of them were like 4, and they compromised, let's do 3, starting in March. Now it's saying they want to do 4. And when they did compromise at 3, they were going to do a 0.25% at a time. This looks like they want to do a 0.5% hike. So they want to get a good jump start on increasing interest rates now and to provide more interest rate hikes than what they said. So this will create bearish activity with the stock market if they agree to do that, because it'll lower inflation and it increases interest rates, but it's also the season for the banks. So this is great for the banks. We're going to see a lot of buying activity for JP Morgan. We're going to see a lot of buying activity on Bank of America. Those are going to be your top 2 popular banks stocks. And so it's bank season for the next couple of years. So again, bad news can be good news. And then, as I had mentioned, there's a yearly cycle with the stock market. There's a 10-year cycle. And so this is just part of that cycle where the last couple of years have been technology. The next couple of years is banks and energy, like oil and gas and things like that. So things like Exxon, Mobil, and whatnot, those are really, really popular energy stocks. And so, but this is going to create some bearish characteristics for very popular technology stocks. So just know that. So number 2, earnings read through part 1, pandemic related effects. So one way to read Meta Platforms' muted guidance and earnings report was as a new sign that the pandemic related tailwinds are gone for tech companies, just as I had mentioned. Amazon's rebound after its reports was as much about the worst already being priced into the shares. As the company took a big hit in the third quarter, we'll continue to get read-throughs on both COVID plays and reopen plays this week with the following companies. So a lot of these companies we had already discussed, but we didn't mention the Simon Property Group, but we did talk about the Pfizer, Peloton. So then there's Lyft. Even though Uber, all eyes are going to be on Uber, but both of them will affect each other. And so it's good to kind of keep an eye on both. And then Disney, we got Uber, Twitter. So yeah, so Lyft is Tuesday there. Uber is Wednesday. So again, you know, if you're gonna, you kind of watch the two, because again, they both kind of go hand in hand. So we got Twitter, we got Astra there, we got Cloudflare, Expedia, and then so Peloton's report will get extra attention, just like what we were talking about. I mean, all eyes on this thing, man. Oh, with news breaking of Amazon's purported interest in the fitness equipment and subscription company. So that may provide, that's interesting. Amazon's purported interest in the fitness equipment and subscription company, which is, why would they do that? Which is at least a sign that Peloton could be up for sale. Uber will also have an investor day on Thursday morning following its report, which will be closely watched. So definitely do not get into Peloton early. You know, I would suggest, especially with get in. If you're going to do puts on Peloton, do it like 5 minutes right before the close. That way, but also be aware if there is any news with Amazon maybe buying the company, which I can't imagine because the company has a lot of bad news right now, and so I can't imagine Amazon buying a company that has recent bad news, and so but this could be manipulation. And so, like I said, just be careful in case you start buying puts on it too early, and then all of a sudden they're trying to manipulate it, and the stock goes up. You know, we need the stock to go up as high as we can, so that way we can buy puts, and that way it can fall as much as it can. So just be cautious. That's why we read this stuff. Number 3, earnings read through part 2, inflation effects. The other big story to watch across this earnings season is the impact of inflation on the different companies. We have companies from the material sectors, consumer goods and food, healthcare reporting, all of which should add to the picture of how widespread inflation is and whether there are signs of easing ahead, whether it's supply chain related or otherwise. This batch of companies also include these. So we got the Tyson Foods, we got the Cisco, and so on. But like I said, we're focused on the top 10. Number 4, the Russia and Ukraine developments. Now, a couple weeks ago, we went through a correction. We're still not done with the correction, so don't think that the correction is over yet. It's just kind of hesitating is all it's doing. And we're still in the bearish season until mid-March. And but the reasons why we had suffered a major correction within 2 weeks is because we weren't sure if Russia was going to invade Ukraine or not. And so, but the longer they sit around the borders, it's more likely that they're not going to invade Ukraine. So then all of a sudden we started seeing some bullish characteristics with the stock market all of a sudden, because Wall Street investors are now calling Putin's bluff that, oh, you're not going to invade now. Because there's some really good reasons why they won't, is because they just waited too long. And there's more eyes, you know, over there. There's more, Ukraine's more prepared. You know, there's more supplies, there's more resources, there's a little bit more of everybody, you know. And so that's a disadvantage on Russia's part. So now it's more and more unlikely that Russia's going to invade, but they could still surprise the world, and that will cause catastrophic bearish characteristics for quite a while. But we'll also see oil and energy surge up like crazy. So, but the diplomatic efforts and military maneuvering is set to continue between Russia and Ukraine, as well as the Western countries. Reuters reports that French president is set to visit Russia to speak with the president of Russia, on Monday and Tuesday, while the Washington Post reports that the United States president is scheduled to meet with the German chancellor on Monday. This comes after reports of briefing given by Biden's administration to the United States Congress officials that Russia has built up 70% of the necessary force to invade Ukraine entirely. The briefing did not affirm that would be Russia's final decision. The stakes for Russia, Ukraine, and then Russia, and then the border or the broader geopolitical landscape are significant. And from the market perspective, the price of oil, which crossed the $90 barrel for the first time since 2014 as it continues to recent ascent, and natural gas will be focused in susceptible to any resolution or escalation. And so, yeah, Thursday was when I watched that the barrel of oil price hit 90, and then Friday it was like, what, 92 or $94. I mean, it was crazy. And so it's only going to get worse, and it's going to affect all of our lives, unfortunately. Where a barrel or a price of gas is going to be, $6, $7, $8 a gallon. And if the cost of gas goes up and diesel prices are going to go up, it's going to defeat the whole trying to lower inflation, and the cost of living is just going to keep going up because the truck drivers are going to have to spend more on their diesel to transport the food that we eat, the products that we buy, and so the cost of living is just going to keep going up because of this, and so it's not looking good. A lot of people, just aren't even into this stuff, especially, investors and traders. But this has an effect on all of our lives, whether you are an investor or trader. So it's just important to know this stuff anyway. So number 5, cryptocurrency has been reviving up again, which has been kind of interesting. Cryptocurrency seems to be participating in our bearish season, where normally during the winter season, cryptocurrencies usually rather bullish, but in this case it hasn't been. But lately we've been seeing some pretty interesting bullish characteristics with cryptocurrency. But cryptocurrencies were an asset class that appreciated the turn of the calendar page after losing nearly 20% in January. Bitcoin has risen nearly 8% in February. It's really only the 6th of the month. And Ethereum has also risen nearly 12%. As ever, the question is, what will be the incremental driver of the price performance in the sector? The rebound has timed pretty closely with the NASDAQ's, at least temporarily, bottom from the January correction, suggesting that the crypto performance, and maybe tech stock too, is just an outlook of risk appetite, with another part of the rationale for Bitcoin at least being its use as an inflation hedge. The CPI report may have to be the next catalyst for higher or for lower. So that concludes the earnings reports and the economic reports. Then we'll move on to Friday's activity with some stuff. But it looks like there may be some information in our chat box here, so I'm going to take a look at this. One of you guys in our chat room here said, could you please repeat how Monday and Tuesday look like? So again, as we were talking about the economic report for the week, there really isn't anything scheduled to happen for Monday and Tuesday. So usually what that means is that it could either be affected by weekend news, which I don't really see anything major this weekend that could cause any kind of bearish activity for Monday. So usually Monday mornings, investors are eager to get back into trading, and so they'll start pumping up stocks. So we should see Monday morning it should open in the green, as as long as there's no issues with Russia and Ukraine and whatnot, and so or news media is trying to to sell fear, pumping fear out there, trying to scare investors that'll cause them to sell. But like I said, I have not seen that yet so far, but to be determined as we get closer into pre-market. but I would say Monday should be pretty good. Tuesday, but again, the earnings though could also have an effect on certain segments of the stock market. So, but again, those are going to be like on Monday we have our semiconductor. So that's going to be probably the biggest one for tomorrow morning. And so that if on semiconductor goes down, that could hurt the technology sector a little bit, or industrial, or both. And so then after close, we have a couple, nothing really major Monday after close, but Tuesday morning we have Pfizer, and so that and BP for energy. So these are kind of what's going to kind of drive the I'd say the stock market during pre-market. So we got to keep an eye on these, but Pfizer, as we're looking at the analysis, Pfizer has a good high percentage chance that they're going to beat their earnings. I'm sure BP will as well. So it looks like it's anticipated Tuesday morning should be in the green. And so, but like I said, Monday is a little questionable because it's on semiconductor with so it's a mixed signals, because it doesn't look good for the on semiconductor. But again, Monday morning investors are eager to get back in. So that's where I'm thinking mixed signals. But Tuesday looks like it should be pretty much all green. And then Tuesday morning, if Peloton falls pretty significantly, we could see a lot of red especially with Lyft too. If Lyft falls down as well, we could see a lot of red activity during Tuesday morning. And then Wednesday, you can kind of carry that over. So Wednesday morning could be kind of red as well. But then we have the crude oil inventory levels after the pre-market. So that's 1 hour after the stock market opens. So we'll have to kind of wait and see what the report comes back at, because if Wednesday opens in the red, you'll notice that investors will wait. Like all of a sudden you'll see the stock market will be flat. It's not volatile, it's not moving up or down. It's just wherever that it landed, and it's staying there because investors are waiting. They're waiting for this report. They're waiting 1 hour after the stock market opens up, the ABCD pattern. They're waiting for that C point. And so once this comes out, then they know that the stock market will trend down the rest of the day or trend up the rest of the day. So will all be based on that guy right there. And so that's kind of how we're looking at Monday and Tuesday. So the next one in the chat room says, but in the weekend, Peloton is up around 20%. Yes, so great question, but in the weekend, Peloton is up 20%, only to fall back down 20% to back where it was. So we need to take an opportunity of that. So that's why it's up, because only to go back down. And so next, Annette, looks like you said, I am new here. Can you please go over here how to straddle? Yes, let's do that. And let's do that right now. So let me see here. I'm going to pull up. So I use both Robinhood and Webull. I'm going to pull up Webull. This is my Webull, graphs. This is let's find something. Let's see here. What was pretty volatile? Let's just do. Let me look at a stock here real quick on my phone here. I want to find something that had a pretty good movement, like looks like Amazon. Let's do Amazon. Amazon's usually expensive, but we'll, like I said, we're just going to use them as an example. So here's Amazon. Amazon was up like 13%, and so if you're not familiar with options, or maybe you are a little bit, whatever. So basically, there's really only a few very important things to know. A call is betting the stock is going to go up. A put is betting against the stock, betting that the stock is going to go down. Now, a straddle is when you buy both. you're betting the stock goes up and you're betting the stock goes down. Now you may hear a strangle, because both a straddle and a strangle are basically the same thing. You're betting the stock goes up, you're betting the stock goes down. The straddle is where you're betting the same strike price. The strangle is different strike prices. The strike price, you'll have a high strike price and you have a lower strike price. And so, but the concept, the strategy is exactly the same. You're doing both. So Amazon ended at about $3,152. It was up Friday 13.5%. And so looking at, and so this the expiration date, because I don't have Friday's expiration date because it's expired, it's no longer. So we're looking at the expiration date for February 11th, which is not expired. But just from this, you can see that your call or your puts, you would have lost 80% of your investment in your puts betting against Amazon because it went up, and where your calls were up as much as 200%. So, or even 150% washes out your loss on the other one and puts you ahead. So the idea is trying to find something that will have a big movement, and that way that big movement will provide huge gains that washes out your loss and puts you ahead. And that way you just keep doing that over and over. Now, there are a lot of straddling strategies that we can do for earnings reports like this, but when you do earnings, you definitely want to make sure that the strike price is within the money, meaning that it's at the share price, or within the money, meaning past the share price. Because if something goes wrong, the values of your calls and puts can be affected by something called IV crush, which is also known as implied volatility crush. It will affect and change or lowers the value of your calls and puts if it hasn't reached the money, or if it hasn't reached your strike price, it'll just drastically lower the value. So that's why you want to be at the money or within the money if you're going to straddle through earnings. And so, but there's a lot of straddling strategies you can do on a regular basis, like Apple. A lot of people like to straddle Apple as well as a SPY. SPY is an ETF. And so you can buy calls and puts at different times, but a lot of straddle investors will usually buy calls and puts 5 or 10 minutes right before close, and they'll sell 5 or 10 minutes after opening, or they could sell at different times. Usually the first 2 signals, you're buying and selling signals, so that way you can maximize your gains on one and minimize your losses on the other. So you don't always have to sell at the same time. You sell at different times. And that's the key thing. Now, if we were looking, if we could still see last Friday's gains and losses, you would have lost like over 90% of your calls, and you would have gained like 500% on your calls. Now, when you're straddling, you always want to use the closest expiration date, not the furthest, because if you're using the closest expiration date, it means that it'll be more volatile, and that's what you need. You need volatility as part of your ingredients. And because, like I said, if you have a further expiration date, your gains aren't going to be that much. You want to double that. Like I said, this, for February 11th, this is 200%, where last Friday, the 4th, this was like 400%. And that's what we want. That 400% would have washed out your 99% loss in the other one, and you still would have been ahead by like 250% or something in one day. And so this is huge. So that is, that's a little bit more information on how to look for straddling. But we're going to look at straddling activity for Friday here in just a little bit. I just want to go over some of the other things in the chat room here. So it says, hey Carlos, were you able to find the market calendar that shows the triple witching days? So I haven't really found a solid a stock market calendar yet, but unlike ones I found before, but I can kind of show you what I'm trying to look for. But so if we go to like stock market calendar, if you can find a good one, it'll provide a lot of great valuable information, like holidays, what days are going to be closed, or limited hours. And so sometimes you can go to images and you can find different things, but I'm looking for a calendar that shows a lot of information, not just holidays, but also particularly like triple witching days. Triple witching days happen only 4 times a year, and it is every third Friday at the end of every quarter. So that's that's basically going to be your March, June, September, December. So let's see, March 20th, Friday, that is going to be our next triple witching day, which is basically one of the most bearish days out of the quarter. And so, which we'll talk more about that as we get closer to March. I will alert everybody just to let them know that, both Thursday and Friday could be very, very bearish. And so we can take advantage of that. As long as we know what's going to happen, we can take advantage of that opportunity, and that way we can profit from it. And so, but as soon as I can find, or I'll develop a good stock market calendar, I'll let you guys know. And so what else do we got here? So where's the best place to look for updated White House schedules? Okay, so so I haven't yet found one that shows what the schedule is for like the future, but I can only find one for the current day. I think it might be this one here. Yeah, so this is the one that I use, and I post in the in our chat room, as well as our basically our chat room, because and you can see that Sunday, blah blah blah, and then you got Friday. And so again, this is Eastern time, so it's very, very important that you are aware of the time zone as well as matching up with your time zone. This is critical because and that's why I'm thinking that maybe there isn't really a schedule for the future. Maybe they just post this every morning because maybe they do it on the fly, on the go. And so, because things always change. And so, but it's still wise, very important to look at this on every morning during pre-market before the stock market opens, because we need to see, is anything scheduled to be released? Like, for example, the press release by Jen Papsky. She can manipulate the stock market, so it's important to be aware of that. Maybe if open up your YouTube, put on or save, subscribe to a couple news channels like NBC or whatever, CNN, and a lot of times that those notifications will notify you when they go live. Now, a lot of times when you have a news application that notifies you from this, it could be 5, 10, 15 minutes late. And so that's why it's important to know the exact time of when this is going to happen. That way you can then tune in maybe right at that time or right before to figure out whether it could provide bearish characteristics or bullish characteristics, because they could end up saying something that could spook investors, and they hear something they don't want to hear, and that could cause bearish characteristics. Or maybe they'll say something that investors do want to hear, and then all of a sudden that can create a lot of bullish characteristics. Well, now you just heard it at the same time these news companies heard it, and now they're trying to process the information. They're trying to create these articles and videos and stuff, that way they can blast it out to the news for the rest of the day when you heard it live when it happened. So, and then other things like this, like the president delivers remarks on signs of executive order, blah, blah, blah. And so when the president comes out, no matter what the president is, again, keep the emotions out. It's the job title that has an impact on the stock market. And so, I don't like the guys our president just as much as you guys do either. So, but it does, like I said, the person has an effect on the stock market, and that's what matters most. You got to think logically, keep the emotions out, and think statistically, analytically, and statistically. And so this is so far the best website. If you guys do find something that does kind of show more schedule for later on this week, definitely share it with me and the rest of the group. But for right now, this has been very, very accurate. Now, last Friday there was definitely a lot. Well, the president was late, like by over an hour. But there was a lot of weird things that were happening, over there in Russia, and so I think that they were pretty busy with that and weren't expecting to be really, with their time taken over, so that this whole schedule was completely late Friday. So that is the White House schedule that I have. We show how to straddle a firm to play earnings. Okay, so let's go over activity for the stocks and options. And so I use a website called barchart.com. It's free, doesn't cost anything, and so but it's very, very useful. And you can see crude oil is up over $92. Not good. We're going to see $100 probably by the end of this week, I bet. That's not good. So barchart.com, you just click on options, a little menu appears, then you click on most active options. So we'll click on that. This will summarize the entire stock market system on one page. And that's what we need to see first. So, and it's sorted out by options volume. And again, volume is the current trading days buying and selling activity. So it could be mostly buying activity, it could be mostly selling activity. We never really know, but it's really good to really see what the overall activity is. So Apple is always usually dominates the top of this list. We have almost 1.2 million in options volume, and the reason why Apple is usually on the top of this list is because it's the most favorable stock option to day trade and to swing trade. You got a lot of people that'll straddle it. It doesn't move very much. If it does move, it's usually moving 1%, up or down, 1.5%, 2%, at most. Very rarely do you ever see it 3%. But the moving average lines and everything are much smoother. They're more predictable, and that's why it's always on the top. But we can see a little a call and put percentage ratio, or out of this amount of volume, almost 58% are betting that the stock is going to go up that current day as well as the next trading day, where 42% of this volume is betting against that stock that current trading day as well as going into the next trading day. And so when you look at this stuff regularly on a daily basis, you'll normally see what's normally on here, what's not normally on here. And so Apple is usually always on the top. Tesla is usually on second place. So it's very interesting to see that it's in fifth place. That's very rare because it's also a very popular stock that people like to day trade and a straddle or swing trade. But PayPal Holdings, which has had a lot of some issues this week, I think they had they beat their revenue, but they missed their earnings just by a little bit, and they had plunged, like they were one of those like plunged at negative 30% stocks, just like Netflix did the week before. This was that was this week, and then it kept going down. I think the next day it was down another 5%. Well, all of a sudden on Friday, I started seeing a lot of unusual buying activity with this guy. We have a lot of unusual volume, first off. So for a stock option that's not normally on this list, and all of a sudden it's on this list, especially on the second place, we got to consider that as unusual activity. Next one is that it's in the green, which is good, which means it's not even up that much, and out of this unusual amount of volume, we have almost 62% is betting that the stock's going to keep going up that day as well as the next trading day, where 38% is betting against the stock, betting that the stock would go down a little bit more that day as well as the next trading day. And so now Ford Motor Company had also dominated this list, third place on this list. They were down a lot. And so, and that's not normally like Ford Motor Company, but it was definitely anticipated because, with this season of earnings, where we go over the fourth quarter, is extra volatile. And the reason why that is because not only do they talk about fourth quarter statistics, but they also talk about the yearly stuff of how good or how bad last year was. But they can also talk about how they anticipate the rest of the year would look like. So that's why we're seeing extra volatility with this earnings season, because it's normal. It happens every single year. And so just know that. And so we have about 59% people betting that Ford Motor Company is going to bounce back up that day, or as well as the next day, where we have about 41% betting against the stock. And this could be, more straddling activity, especially as you get more closer to 50-50. People want to definitely take advantage of this, because you could have gained a lot at that just by buying both calls and puts, that kind of volatility. And then we have Facebook. Facebook is normally on this list. They're usually somewhere in the middle, but they're a little higher than normal. They're just hovering around that 0%. It's only down, 0.28. But they had a pretty rough time too. I think they were down pretty substantially, but it looks like investors are getting to become very bullish on it. They're expecting kind of a nice recovery. So out of this almost 1 million in volume, 66.5% are betting that Facebook is getting ready to bounce back up. So we can get a lot of great information of what people are doing, rather than going on Facebook or somewhere and saying, what are you guys doing, or blah, blah, blah. Follow the money. Look where people are investing their money, because it's like, put your money where your mouth is. That's this. And so where Tesla, did reach 5th place, normally they're up there, but they did bounce back up. They did a pretty good job Friday, but they're usually 50-50 when it comes to their calls and puts. Snapchat, we talked about Snapchat last week. A little bit in our chat room. We didn't have so much a meeting then, but we did talk about in our chat room that Snapchat was going to be the big mover. That was the one that was, the earnings had a 50-50 chance that it was going to meet. It was either going to beat or meet, but it had the highest movement. It was like 22% that it was either going to go up or down. And look at what it did, 58%. That is phenomenal. Straddling that, we lost 90% of our puts, but our calls, we gained like 300, 400, 500% on our calls on that. That was huge. And I hope all you guys took advantage of it. And if you didn't, you better not miss the opportunities this week. So Amazon, definitely, what was up, but you can kind of see a 50-50 there. So it looks like some straddling activity. Amazon's normally on this list. They're usually in the middle or maybe towards the bottom. Then we have ET Energy. They're only $10.24 a share, but they're not normally on this list. And if they are, they're usually on the bottom. But as we're talking about energy and banks, we're going into that season. Now, all of a sudden, we see energy there. We see Bank of America there. We see ExxonMobil all of a sudden. Well, that's why. Is because we're entering that season of the banks for the next several years, and energy, as Russia is starting to, at least as the media is trying to promote that Russia is trying to invade Ukraine. That's just going to cause oil prices to go up. It's going to cause more millionaires, investors, and traders to buy into ExxonMobil, pumping these things up. And so, but right now we see the first top energy one is right here. It's the least expensive one, which means it may have the most potential gains than any other energy, because so far, for some reason, investors are focusing on this one. And you can see this is highly rare. 97% out of this amount of volume, 97% are saying, yep, this thing's definitely going up. No matter what, 97% this thing's going up, but for how much? So we need to dive, a little bit more into that. What kind of calls and puts are people getting? And so I use another website from NASDAQ website for that. So I'm going to flip over to the tab here. Right now I have Peloton on here, but let's change the top ticker in the URL address to ET for the energy. And so. But by looking at this, NASDAQ updated their website
I think what, a year ago or two. They used to have the expiration dates on here. Now you have to click on them to see the expiration date. It's kind of stupid, but it sucks. But some of these may have expired, but normally you can tell if it's expired. It usually expires worthless. It's a very low number. But what we need to see is that activity that we're looking at, that 97% call ratio. Why is it 90%? What are people doing? So it's currently at, this is weird, unchanged, but $10.24. But for some reason, a majority of the activity, we have an $8, $9, $5 call strike price. So it's already in the money. It had some pretty good, decent open interest, but for some reason now we have the amount of volume exceeds the open interest a lot. So that is also unusual activity. When you see volume that exceeds the open interest, because open interest is basically your like an accumulation of volume prior from the current trading day. So the volume resets itself daily. So Monday it goes back to zero and then it starts over, but then it merges itself into the open interest. Unlike regular stocks, they don't do that. Or your calls and puts do. So that way you can kind of see how much interest that particular individual call put has. So, but now all of a sudden it has a massive amount of interest. So that will also show pure buying activity, because if the volume is less than the open interest, we don't know exactly if it's buying or selling activity. It could be mostly selling activity. People could just be dumping it. But when you see that it is greatly over the open interest, that is highly unusual buying activity for some reason. But how come we don't see any stock or any really higher strike prices? So that's kind of interesting. We see a 10.5, we see 11, but we don't really see, like, something we can see maybe a 15 or 20 or something. So we have to kind of do a little bit more research on that, because that is a little unusual. But yeah, let's go back over here to the bar chart website. And then in the middle we have AMD. AMD was up Friday, a pretty good, decent chunk, almost 3%. We're out of that volume. We have a 65% call ratio. So you can always go down to, but it's just really important to really look at this stuff regularly, because you'll notice what is normally on here and what is not normally on here. So you want to really pay attention to the two. You see the Pelotons right here on the list. They're not normally on the list. Looks like we're almost about 50-50, but Microsoft, ExxonMobil, and whatnot. Now, going back to the options list here, the next page we want to see is the options volume leaders. So this will sort out your highest volume in the individual calls and puts. So we need to see what's going on here. So today again is February 6th. When we're looking at this on a Friday, Saturday, or Sunday, we're going to see some of these that are expired. So DTE basically means the number of days until the option expires. So we want to avoid any of them with zero, because they're no longer valid. They're gone. They're expired. And so we want to ignore those. So the top one is ET. So obviously it's still good. It expires in 14 days or February, Friday the 18th. We have, even though the current price is $10.24, we have an $8 call strike price, which is the most dominant individual call and put out of the whole entire system for last Friday. And so the next one, we have another ET here with a $9 strike price, kind of the same thing going on there. Then the next one is another ET. Just so weird. Look at that. Well, a year from now, 350 days from now, January 20th, 2023, $5 strike price. We're way in the money. It's like, what is going on? But for some reason, people are buying a lot into it. But these prices are pretty expensive. This $5.25 per share, but per contract, that's $525 per contract. So that's kind of how you can kind of read that. And so we have Ford Motor Company. We have a $20 call strike price. This one expires in March 18th, right during the end of the bearish season. So. But again, Ford had dropped, 10%. So we could easily see Ford kind of come down, maybe another little bit more on Monday. But obviously, we see a lot of investors that have their eye on this because they know Ford, this could be undervalued. Ford is working on a lot of electric vehicles. They're building one or two more factories here in the United States that are going to be focused on EV, electric vehicles, and battery manufacturing and all kinds of stuff. So we're going to see Ford easily at $30 probably by the end of this year, at least. And so, and that's where we're going to start seeing more Ford calls because investors know this. And so also the Ford is developing the Ford Lightning. There's several Lightnings that are being manufactured. Those are going to be the demo models for Ford dealerships. Ford dealerships should start receiving these, I want to say around April. And so that will allow you to go to the Ford dealership. You can touch, you can feel it, you can drive the Ford F-150 Lightning. It is an amazing truck. No matter what brand that you're loyal to, whether it be a Toyota, a Chevy, a Dodge Ram, you drive this thing, it will change your perspective because it is such an amazing vehicle. Independent suspension, you have a motor in the back, motor in the front, the battery board in the middle. So you really have a good center of gravity feel with that truck. Independent suspension, so it rides like a Cadillac. I mean, it's just so smooth and comfortable. In 0 to 60 in 4 seconds, this thing is a rocket. And I mean, this vehicle is such an amazing vehicle. And once dealerships start getting those and people start driving it, they're going to start placing more orders. And that's what Ford uses. Ford Motor Company has learned a lot from Elon Musk because Elon Musk has been able to manipulate his deliveries and sales reports all based off online orders, because they'll say, oh, we had all these online orders, blah, 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 even though they haven't even yet built the vehicle yet. It just creates more hype and it creates more volatility, but it makes the investors and traders invest in that company because then they're just really excited and it really helps appreciate the stock value. And so that stuff's just really right around the corner. So just know that there's a lot of attention going on Ford Motor Company right now because the price is very low. Even though looking at Ford Motor Company in the past, Ford used to have around $6 a share during the wintertime and $9 a share during the summertime. They would do that like clockwork, but things are a lot different. Ford is really accelerating with the electric vehicle company or the segment more than any other automotive companies other than Tesla. So people are going to there's going to be more news with Ford week after week. So just know that. So the next one is going to be Apple. We have a $175 call strike price when Apple's $172. So by also trying to figure out how Monday is going to look like, we can obviously see there's a lot more call buying activity than there are puts. Now, if there was more puts activity than calls, then you should be worried and know that Monday, because investors are betting that Monday is going to be open up in the red. But so far, this is just more clues, more pieces of the puzzle where all the stars are aligning, showing that Monday is more likely to open in the green. And a lot of this information is populated throughout the day during the trading day. And so when the stock market opens, the best time to look at this stuff is 1 hour after the stock market opens and continue to look at it because it updates it about every 15 minutes. You may have to refresh the page, but it does update every 15 minutes. And so basically your last update will be 15 minutes before the stock market closes, which gives you plenty of time to analyze what you want to do based off this information before the stock market closes. So then we have another ET right here, $5 call, just so bizarre. 714 days. I mean, this thing expires in 2 years. That is just such a weird, bizarre activity with that one. And so we may need to do more due diligence on that. Facebook, this one, so Facebook is down $237. We have a $250 call strike price that expires this Friday on the 11th. So obviously the investors that have watched Facebook go down, and now they're saying it's time for Facebook to go up. And you can obviously tell because it only had 7,500 in open interest. Now it's got 35,000, which is like 4 times of the open interest. So investors are pretty certain that Facebook is going to open in the green on Monday. And so it's just great just to kind of go down the list and analyze things, especially when you see something like this. 314 open interest for Bank of America. So Bank of America is at $48 a share right now, but we have a $49.50 call strike price that expires this Friday the 11th, but it had no interest. Now all of a sudden it had a massive amount of open interest. That is highly unusual activity, because obviously investors are starting to think. And as we're looking at those economic reports and whatnot, they're wanting to talk about the the interest rates and whatnot. So that's going to create probably a nice uptrend for banks. And again, JP Morgan and Bank of America are going to be the most popular ones. Bank of America is going to be the least expensive, so most likely that one will get the most attention, obviously, as we can see here with the activity. So another part on the list, we can go to unusual options activity. This will kind of help find the ones that have the bigger gap between the open interest and the volume. So by looking at this, we want to try to find ones first with the highest volume. So far, the one with the highest volume is going to be that Bank of America that we had just talked about. So that was, I basically say that one is the most attention. Second one is going to be this one with the 24,000 in volume. So we have the Qualcomm. Qualcomm right now is about $179 with a call strike price at $200 that expires this Friday, February 11th. Again, it had hardly no interest, and now all of a sudden it's got a lot of interest. So investors are, again, follow the money. Investors are betting that this stock is going to be up this week. So next highest volume one is going to be this one here for Ford Motor Company. $18 call strike price is almost at the money there. And that's what you want to do. Again, always try to buy at the money, especially if you're going at a short expiration date. If you're going longer, you can have a different strike price. That's fine. But if you're going short, definitely stay at the money or in the money. Otherwise, if you're not in the money, you're at risk of that will depreciate a lot faster than if you were in the money. And so again, yeah, Ford Motor Company, we have an $18 strike price that expires this Friday. Almost 21,000 in volume. It's only 600 in open interest, and you can kind of keep going down the list and whatnot. The PayPal, which we had talked about, PayPal, we have which is $126 right now with a $140 call strike price that expires in 2 weeks in Friday the 18th, with hardly no interest at all. Now all of a sudden it has over 14,000. So there's a lot of great stocks here you can put on your watch list that we'll also be watching. But like I said, we gotta keep things a priority. So right now for the week, we have the priorities for the Peloton and some of the other ones with the earnings that we had mentioned. So but these are some of the other ones that we can also put on our list. But it's gotta kind of we just gotta make sure. So usually when you're going through a week, it's good to maybe have at least at most about 10 stocks to watch, but you wanted to have like your top 3, top 5, and then your other bottom 5. So but also to be aware that other things can happen too unexpectedly throughout the week. And so going into straddling and strangle, so there is a straddle strangle activity area here as well. We have our short term and we have our long term, or long expirations, shorter expirations. So but you want to look at both, especially right before the market closes. Again, 15 minutes before the market closes. So when we look at this is basically Fridays, or the last trading days activity. Now when we're looking at this, we'll start from the top of the list and we'll work our way down these menus. But what we're wanting to look for is multiple of the same thing, the multiple of the same stock. So if there's more of the same stock, we've got to consider that unusual activity. If it's just one, just ignore it, because just could just be a fluke or whatever. But if there's multiple, if there's more than one, then there's something going on. and it could be before there's news or release or whatnot. And so we always want to try to find things that are flying under the radar before it happens. And a lot of times we can find that, with these lists that we're looking at. So far we see I can't remember, is this T-Mobile or AT&T? I can't remember, but either way, it's at $24.08. We have the basically, straddle again is the same strike price. Strangle is different strike prices, but basically we're seeing that the T ticker is showing unusual straddling activity. We'll keep going down the list and see if we can find any other multiple of the same stocks. So I don't see any others of the same on there. So we got T right there. So we got to put that one on our straddling list. Well, if we were to look, going into the next trading day, we'd want to do that. But but this is just how you want to look for unusual straddling activity. So we'll click on long straddle. Again, we want to try to find multiple of the same stocks. I see PLTR. There's two of them there. That's the Palantir Technologies. Anything else of the same? I mean, I see a Tilray here. There was another Tilray on the other list, but we don't see multiple of the same Tilrays. So I don't really see. We got two Neos. So we have Palantir Technology and two Neos. So when we're seeing this, basically investors know that there's going to be some volatility coming really, really soon, and so but they're not sure which direction. So that's where we will see what people are doing. We again follow the money. So we'll go to the short strangle on the side of the list here. Let's take a look at that activity. Again, looking for multiple of the same stuff. We have two AMCs. What else? Here, there's another T there, but none of the same on this list. So what? Just two AMCs? That's it. There's three. There's three AMCs, but nothing else. Okay. So three AMCs there. Normally, I'll see a lot of AMCs on the long strangle. But again, most of the time you want to focus more on the short strangle because that's when they're usually trying to focus on the next trading day. Long strangle could be like within a week, a couple weeks or so, typically. But so we see Tesla. So we got 5 Teslas right here. So far, that's been the majority of any of these lists. There's another Palantir, but I don't see another one on here. Just mostly Tesla. It looks like a couple AMDs. There's 1 and 2. Mostly Teslas here, so it looks like Tesla could be provide some good volatility here, and then you can kind of see within a couple weeks. So that's how you want to look at finding things to straddle as well as things to as well as looking at options activity. And it's all from this barchart.com website. Hopefully this really makes sense. Anybody have any questions?
Yeah, Carlos, I had a question. It's Joe here. Thanks for hosting this as always. Yeah, I'm looking at, let's say Pfizer, Tuesday AM, Peloton, Tuesday PM. Would you say it'd be best to buy our straddles Monday at close for those two tickers?
No, if you start buying too early, it just depends on what the stocks do. But if you buy too soon, both ends will depreciate. I mean, you have time decay, but the more that you buy into the money, the less time depreciation that there is. So,
right.
So to try to avoid time decay, you just buy right before the market closes. If the earnings are in the evening, or if the earnings are going to be in the morning during pre-market, then you want to buy usually within 5 or 10 minutes before the stock market closes the day before.
I'm sorry, Carlos, could you repeat that once more? I had some extraneous noise here.
Oh, no worries. So
you said if the earnings are in the morning, buy it the night before it closed?
Yeah, because the issue that you'd be facing if you buy too early is the time depreciation. The time decay will depreciate both ends. It'll depreciate your calls, it'll depreciate your puts. But if you can buy within the money, you'll have a lot less time decay. So if you were to do that, that's what you'd want to do. You want to buy within the money, not out of the money. Meaning you want to buy within, your strike price should be, within the share price. So that way you're avoiding, massive time decay. But it's more recommended if the earnings report is to be released during the after the stock market closes. You want to buy, that day, right, maybe 10 minutes before the stock market closes. But if it's one of those pre-market or earning releases, then you want to buy before the stock market closes the day before, avoiding any kind of time depreciation and time decay. But sometimes a stock can be very volatile, maybe a day or a couple days before the earning release is. And so you can still kind of, take advantage of those opportunities and do that. So it really kind of depends on your preference. But sometimes you may see no activity because especially if investors don't know whether the stock is going to beat their earnings, because maybe their ratio is 50-50, 50% chance it could beat, 50% chance that they won't. The stock price may range. It just may be flat, hovering around 0%, might not do anything. And that's where, the time decay is going to slowly eat up the value every hour. And so you just gotta, you gotta be careful on that part, but just to try to focus on the ones that will be volatile. And because every day is going to provide some kind of, opportunity. And we'll also be able to show, like, for example, pre-market activity. Let me go over here. So the pre-market activity that I get is through MarketWatch. And the reason why I use them is because when you're normally looking at pre-market screeners from other different sources, you get a lot of penny stocks and stuff. But when I'm looking at pre-market screener from MarketWatch, you don't see penny stocks. You see stocks that have options that are available. And so I'll always highlight this part here. So this is our most active, high market capital stocks that have options that are available. And so we can see that, Ford Motor Company was down, Friday morning because they missed their earnings on Thursday evening. So this is down. You can see that they have a huge amount of volume. So that means that this is going to be very volatile. So that means we could day trade this if we wanted, or if we're going to swing trade it. Most likely, this is going to keep going down because that bearish news is affecting, and it did. Ford Motor Company ended around like 9%, and so at least we can now see what stocks we can day trade or maybe even swing trade just by looking at the pre-market activity before the stock market opens. And so, but like I said, sometimes we can find, activity in different places, but usually it'll be these two places. Pre-market will be MarketWatch, and then the bar chart, right before close. But you can also, if you wanted to look at after hours, you can also do that within MarketWatch. If we go to tools, we can do, I think, after hour trades, and now we can sort it out by most active after hours. Now we can see Peloton, because Peloton went up 26%. Most likely this activity will probably carry over into tomorrow's pre-market. So we'll see Peloton will be, on the top of this list. It'll be pretty volatile and whatnot. But if investors are starting to realize that Peloton could easily, fall. But again, this activity is most likely due from the fact that Amazon could potentially buy the company, but like I said, it's highly unlikely because of a lot of the bad press that Peloton has created during the last quarter. I can't imagine Amazon buying a company that people look down on, and so that's why I think that this is just manipulation. I think that investors or Wall Street or politicians or somebody manipulated this to cause it to go up. That way people can bet against it, start buying puts, and then just to have it to fall. So it's a little bit of a high risk strategy for right now, because with Amazon being involved and potential buying, that's why I'm saying you might want to wait until right before the earnings are released to do that. But but I just have a strong feeling this is all manipulation, and they're doing it intentionally, and they're going to start buying puts immediately, probably during Monday morning. It's hard to, especially with this being speculation, it hasn't even happened yet. There's no reason why it should be up 26%. Most likely this Monday, tomorrow, the stock isn't going to probably finish at 26%. It'll probably, so when you have a stock like that surges up, there's a thing they call gapping up, gapping down. So if it gaps down, usually that means it'll gap down halfway. So half of that, is going to be, like 18% or something. And so, or not 18%, but it's going to be like 14, 13%, something like that. And so that's kind of what I'm anticipating. So, because their earnings do not look good, so there's a lot of conflict, a lot of mixed signals with that. So it just depends on what one is going to dominate it. I think the bearish news is going to dominate it, the knowing that that they're not going to beat their earnings. So it's going to be kind of like a tug of war. It's going to be very interesting. But then Apple, and you got Cody, and then so on. So you can get a lot of great information, valuable information from this stuff. Everything makes sense, everybody? Anybody have any questions before we end our meeting?
Are you planning on doing any pre-market lives or not happy hour, but the final power hour lives this week?
I think so. I think we should. Let's do maybe the morning, and let's do so pre-market. We'll do probably we'll do 2 hours during pre-market. We'll do an hour before the market opens, and then an hour after the market opens, and then we'll do power hour. So we'll have our live session tomorrow. That way you can kind of see, and if you have any questions, and that way we can kind of do this together and kind of know what to expect, what to look for, and all that stuff. Because again, it takes confidence. When I got in the stock market like 13 years ago, I thought it was long-term stuff. You buy, hold, and just never look at it. But then, I started, looking at money market accounts, and they would gain throughout the summer, and then the winter time, you lose all your gains. I was like, that's stupid. Why does it do that? And so I just learned you just got to be more active in buying and selling, and that way you can get in, get out, and that way, you can kind of secure your profits and always gain on a daily and weekly basis. And so, but you just had to learn and about how everything works, just like a board game or like playing Monopoly. The more of the rules that you know, the better of a player that you can be. But you just need to know all the rules and how things work. And when I had developed, when I decided to learn more about day trading and swing trading about 4 or 5 years ago, I didn't know anything about it. I didn't even know you could do that. I didn't know you could buy and sell the same day. And my background is that I'm a professional graphic designer, website developer, and digital marketing specialist. So I discovered that there's Facebook groups for stock markets, and so I was like, great, I can list. I'll be a member of those and listen to people and be part of that. And it was just too chaotic. Most stock market groups are just too messed up. They don't have good admins. They don't provide good material. You have too many scammers. You have too many people that are trying to pump stocks up from people that are holding that they're losing money on. And so it's just a mess. So I was like, since I have website experience, I'll just develop my own group and manage it the way that it should be, and provide materials that admin should be providing. And it became a huge success. I mean, it's very rare do you see a Facebook group with 250,000 members. And so, but over time, I've just been able to provide more and more materials. We've started doing this live meeting stuff. I think in the last I think couple months. So it's really helped out. And because when I started to develop our group, one of the tools I started to apply was chat rooms. So I started to collect other professional traders that have a lot more experience than I did. That way I can learn from them. Now, and I had learned that each successful trader and investor specializes in something different. So now you can pick and choose what they specialize in, and that way you can create your own strategy and your own style in investing in trading. And that was key, is learning from others, and you don't have that ability normally. And so this gives us give you guys a great opportunity to learn from me and from other investors and traders. That way you can develop your own style. So this is a great opportunity, which is normally something to be very, very valuable. A lot of times if you find something like this somewhere, they want to charge you several $100s a month, or $500 a month, or $1,000 a month. And so with this, I don't believe in that. And that's why we're called the Robinhood Stock Market Watch Group, because we collect the information from other places to provide it to you guys for free. So we never charge you anything ever. And for an extra benefit for you guys, we have a huge library in our stock market group. So if you go to our stock market group, you can enter the search bar, just type in I believe stock market library. You should see my posts come up from quite a while ago. And so, right here in the top, it says your stock market Bible. It's hosted on Google Drive. This is our library. And so this is where you have PDF files for everything that has to do with the stock market. So if you like reading, feel free to do that. It's all yours. You can just click on it, and that way you can download it. You can view all the photos right on your tablet, your phone, right on your computer. It's all there. But just be careful though when it comes to YouTubers and books. They always want to, they'll tell you anything that you want to hear that will provide buys for their books if you're an author, or clicks and views if you're a YouTuber. Because a lot of the materials that we've gone over, I'm sure you have never heard of before, because it's highly intelligent information, and for some reason intelligent and smart information is not attractive on YouTube. So it doesn't get very many clicks, doesn't get very many views, because a lot of people are not very intelligent. And so intelligent information may kind of go over people's heads. And so that's why I'm glad you guys are here. You're willing to learn, because the more you learn, the more you're going to earn. So I think that kind of wraps it up. And again, we'll meet again tomorrow. And so tomorrow morning. So if you guys have any questions, we can talk in our chat rooms. But I'm available 24/7. If you have any questions, you feel free to message me on Facebook Messenger. So, but let's kill it this week. Thank you guys very much. Have a great Sunday. We'll talk to you guys here in a little bit.
Thanks, Carlos.